Understanding market momentum with the MACD histogram. Now that you have a solid understanding of how the MACD works, let's focus on one of its most powerful parts, the histogram. By the end of this lesson, you'll know how to read the histogram, recognize momentum changes, and use them to make smarter trading decisions. Before we start, let's check your understanding. Momentum shows only the direction of price movement. Momentum is not simply about whether prices are rising or falling. It tells you how much energy is behind those moves. Strong momentum means a price move is powerful and likely to continue. Weak momentum suggests a move may be slowing down or losing strength, even if the price is still going in the same direction. The MACD histogram visualizes momentum changes in the market. When bars expand from the zero line, momentum is growing and the trend is strengthening. When bars contract, momentum fades and the trend may be weakening. The position of the histogram relative to the zero line also matters. When the histogram is above 0, 1, it shows bullish momentum. When it is below 0, 2, it shows bearish momentum. Select the match. Match the signals. Match each behavior to what it tells you about momentum. Momentum weakening. Expanding bars. Momentum increasing. Contracting bars. Stock. Select the match. Match the signals. Match each behavior to what it tells you about trend bias. Bearish momentum. Above zero line. Bullish momentum. Below zero line. Stock. Traders use the MACD histogram to spot potential trend reversals and price swings. By reading changes in momentum, they can anticipate when a move might slow down, reverse, or strengthen. Good job. Now, let's break down how the MACD histogram shows momentum changes in real trading. When the histogram crosses the zero line, it often marks important signal moments. If the histogram crosses above 0, it usually means the MACD line has crossed above the signal line, a classic buy signal. Meanwhile, if the histogram crosses below 0, it usually means the MACD line has crossed below the signal line, often seen as a sell signal. Zero crossings show that momentum has shifted enough to change the relationship between fast and slow trends. Many traders watch these moments closely, but smart traders confirm them with other evidence. What's your move? You notice that the histogram bars are shrinking upward, and the MACD line is getting closer to the signal line. You are currently not in a position. Quiz. What would be the most logical action? Explanation. Well done. The histogram and MACD behavior hint at a weakening bearish trend, but confirmation, like a crossover or bullish price pattern, is needed before entering. Additionally, peaks and troughs in the MACD histogram can be early warnings that a trend is losing strength. A peak happens when bullish momentum is strong, but now starts weakening. A trough happens when bearish momentum is strong but now begins to fade. When the histogram forms a peak or trough and then shrinks back toward the zero line, it often means the trend could slow down, consolidate, or even reverse. However, Just like shrinking bars, peaks and troughs alone do not guarantee a reversal. They are signals to pay attention and look for confirmation in price action. What happens next? You notice the MACD histogram has peaked and is now shrinking back toward the zero line. The MACD line is still above the signal line, but momentum is clearly slowing down. Quiz: what is the most likely scenario to watch for? You now know how to use the MACD histogram to spot momentum shifts, peaks, and slowdowns. In the next lesson, we'll learn how to combine MACD with trend direction and price patterns to make even better trading decisions. Combining MACD with trends and price patterns. Now that you know how to read the MACD histogram, it's time to take your skills further by combining MACD signals with trend direction and price patterns. By the end of this lesson, you'll know how to confirm MACD setups using the overall trend and important price action. When the MACD and price charts move together, they confirm the strength of the current trend. Rising prices with a rising MACD, or falling prices with a falling MACD, show that momentum supports the direction of the move. What's the market showing? Look at the price and the MACD chart. Quiz: prices are rising, but what does the MACD tell you about the strength behind the move? Explanation: not quite. Remember, when MACD rises with price, it confirms that the trend is supported by healthy momentum. Watch for divergence signs if momentum starts to weaken. However, when the MACD 1 and price start 2 moving in opposite directions, a situation called divergence, it signals that momentum may be weakening. This often serves as an early warning that the current trend could slow down, lose strength, or even reverse. Bullish divergence happens when the price makes lower lows, but the MACD forms higher lows. This suggests that bearish momentum is weakening. Even if sellers are still active, it can signal a potential reversal where buyers may soon regain control, but confirmation is needed before trading. In bearish divergence, the price keeps pushing higher, but the MACD cannot keep up, suggesting that buyers are losing strength. This can be an early warning of a slowdown or a possible bearish reversal, but as always, further price action confirmation strengthens the setup. Select the match, divergence types and signals. Match each divergence type to the price and MACD behavior it describes. Price and MACD are same. Bearish divergence. Price is down. MACD is up. Bullish divergence. Price is up. MACD is down. No divergence. Stock, good job. When spotting bullish or bearish divergence with the MACD, make sure there is enough space between the first and second highs or lows, usually at least 10 price bars apart. Markets move in waves, and a full wave between points gives a more reliable signal. If the highs or lows are too close together, it could mean that the current wave is still developing and the market has not yet completed its move. The divergence should also be obvious. A clear lower high or higher low on the MACD compared to price action shows a stronger momentum shift. The clearer and more separated the divergence, the more trustworthy the signal becomes. Time to practice. You notice the price has made lower lows, while the MACD has formed higher lows, creating a clear bullish divergence. The price is now starting to rise after the divergence appears. Quiz: what is the smartest action to take? Explanation: exactly. Bullish divergence shows weakening selling pressure, but waiting for price confirmation improves your chances of entering at the right time. What's your move? You see the price making a lower low, but the MACD is making a higher low. Price has not yet reversed strongly. Momentum is just starting to shift. Quiz: what is the smartest action to take now? Explanation: exactly. Divergence is an early signal that momentum may change. Waiting for price confirmation helps you avoid false entries. Excellent. You've learned how to spot divergence, recognize momentum shifts, and understand when price and MACD agree or disagree. Up next, we'll have a short quiz to review everything you've learned and make sure you're ready to apply these skills confidently.